I'm gonna ask you a blunt question. Have you ever booked a super cheap flight and then instantly regretted it when you realized it came with baggage fees, no snacks, and no seat selection? Yeah, I've got stories and I bet you do too. Well, picking a health insurance plan based on price alone, or any one factor for that matter, can feel exactly like that. It might seem like a deal at first, but once you actually start using your plan, all those extras start to add up. Now I get it. Choosing a health insurance plan can feel super overwhelming. It's one thing to see words like copays and deductibles, but actually figuring out how much money you'll spend on medical care under each plan, totally different stories. But don't worry, because I've got you. Today, I'm breaking it all down using the simplest travel analogy, and I'll walk you through what to consider so you can pick the best plan for you. Welcome to Insured and Informed. I'm Shamy, a healthcare finance professional, and your go-to girl for health insurance and policy breakdowns. So if you want to learn how to pick a plan, read a bill, or just figure out what all of these health headlines actually mean for you, go ahead and hit that subscribe button, like this video, or drop a comment down below. All right, first things first, what kind of health insurance plan should you choose? Well, there are four main types: HMO, PPO, POS, and EPO. And just like your vacation style depends on your wants and needs, so does your health plan. So think of it like this. If each plan were a vacation package, your decision really comes down to two questions. One, is it important that you can see any doctor you want? And two, do you want to coordinate your care or have someone else manage it for you? Let's break down each one. First up is the HMO. This one's like booking an all-inclusive resort where everything's covered as long as you stay on the property. In health insurance terms, that means you're going to stay in-network for your care to be covered. You'll also need a referral from your primary care doctor to see a specialist, but it's the most budget-friendly option of the four plans. This plan is great if your favorite doctors are already in-network, but might not be for you if you want the freedom to see any doctor you want. Now, a PPO is the polar opposite of an HMO. It's more like taking a spontaneous road trip. You're in charge and you've got tons of flexibility. You can go in-network or out of network, though it'll cost you more to go out of network. You don't need referrals and you can see specialists whenever you want. It's perfect for people who want that freedom and don't mind paying a little bit more for it. A POS plan is like a group tour where you can sometimes break away and do your own thing. You can go out of network, but it's gonna be more expensive. And just like an HMO, you'll still need a referral to see specialists. So it gives you some flexibility, but with a little more oversight. Then there's the EPO. Think of it like a guided city tour with a locked-in itinerary. You have to stay in network, no exceptions. But you don't need a referral to see specialists. So there's structure, but with a little bit of freedom too. It's often cheaper than a PPO and can work great if your favorite doctors are in network. All right, now let's talk money. This next part is all about estimating your actual healthcare expenses. Think of it like deciding whether to buy one of those all-inclusive city passes on vacation. You know, the ones where you pay up front and get free access to museums, guided tours, and skip the line everywhere. That's kind of like choosing a health plan with a high premium and low deductible. You pay more up front every month, but you save money every time you go see your doctor. Now, the other option is to skip the pass. Maybe you don't plan on seeing a ton of attractions, or you want to save money at first. So you pay for every museum, every tour, and every ticket. Well, that's like picking a plan with a low premium and high deductible, also known as a high deductible health plan, or HDHP. You pay a lower amount monthly, but it could cost you more if anything unexpected comes up. So how do you decide? If you're generally healthy, barely see the doctor, and mostly use your plan for annual checkups, a high deductible plan makes sense. especially if you have an HSA that your employer contributes a lot to, which I'll talk about later. But if you go to the doctor often, take prescriptions, are pregnant or planning to be, have a planned surgery coming up, or have a condition that needs ongoing care, you may actually end up spending less overall with a plan that has a higher premium and lower out-of-pocket costs. And hey, if you're still not sure, try using a healthcare cost estimator tool like Health Plan Compare. This is not sponsored, and I'm just providing it to be helpful. It lets you plug in your info and see how much you'd actually spend under different plans. To use this, gather details like the copays, deductibles, and out-of-pocket maximums that each plan you're comparing to has, and also gather your doctor's fees. You can log into your insurance portal and look at your last year's explanation of benefits to see your doctor's fees, or call your doctor or hospital and ask for estimates. Once you have that information, you can compare the total cost to you under each plan. That way, you're not guessing, but you're choosing based on actual numbers. So in this example, if you anticipate your doctor's fees will be $5,000, Plan B would save you the most because you'd pay about $4,300 including your premium. All right, now that you've picked a plan and estimated your costs, let's talk about how you'll pay for care. Think of it like this. Are you using cash, a prepaid gift card, or your company card? Let's start with an HSA or a health savings account. This is the GOAT of healthcare accounts because you contribute pre-tax money, you can invest it, and any interest, dividends, or capital gains grows tax-free, and you can withdraw it tax-free for qualified medical expenses. It's seriously one of the best financial tools out there. Your employer can also add money to it, and you keep it forever. Even if you switch jobs, the account goes with you. But just like some places make you use cash if you're not spending much, HSAs are only available for people with high deductible health plans, which is one of the cheaper health insurer options. Then there's an FSA or flexible spending account. This one's like a prepaid gift card because you either use it or lose it by the expiration date or the end of the plan year in health insurance terms. It's a good idea not to park more money here than you spend in a year. You contribute pre-tax dollars, but it doesn't accrue interest and you can't invest in it. And if you leave your job, you lose the account. But still, it can save you money if you know you'll use it. And finally, we have the HRA or health reimbursement account. Think of this like your company card. It's entirely funded by your employer, meaning you can't add your own money to it. But unlike an HSA or FSA, you can use it to pay for your premium in addition to medical expenses. But just like a corporate card, it's not yours to keep. If you leave the company, the account doesn't go with you. Still, if your employer offers it, definitely use it because it's free money. I hope this video helped you make sense of something that no one actually teaches us, but everyone needs to know. And if it did, please hit that subscribe button, like this video, and share it with someone who's struggling to pick a plan. Thank you so much for watching, and I'll see you in the next one.